Hello and welcome back to another episode of Taking Back Saturday, a Happy Buyers Club podcast where we break down the real estate market each and every Friday and help home buyers build confidence, follow a process, and hopefully buy really happy. I'm your host, Chayse Jones, and joining me for the first time in a couple of weeks is my man, Sam Hunter. How are you?
It's only 1 week, isn't it?
No, listen, for those that haven't been keeping close tabs on the Taking Back Saturday / Happy Buyers Club Instagram, we've had a few guests over the past few weeks. So if you haven't listened to our episode last week, which Sam hosted with Josh Sawyer, it's fantastic. Have a listen. We've got a few more special guests on the horizon. Pulling back the curtain, we record them out of order sometimes, guys. So
Sure.
Here we are, revealing all the secrets.
I'm much more comfortable on this side of the desk.
Yeah, it looks good on you. That's your good side.
I appreciate it.
We've had a chance to see July results come through. Well, yeah, state of play with the market, and then we've also now last few weekends had a chance to sort of see what that looks like in the flesh and how those results have correlated. So July results saw Brisbane house prices increase a further 1.1%. That came in line with interest rates remaining steady for the 10th straight month. That all being said, we're still looking at annual growth of 16%.
It's pretty hectic.
Which is wild, right?
Yeah.
But anecdotally, what does that look like on the ground? You know, those sort of steady growth rates, but then also having seen tremendous growth over the space of 12 months. Probably fair to say that things are cooling or fair?
I think fair is definitely the word that I would use. We did our Saturday market wrap this Saturday just gone, so the 10th of August. And it was 50% clearance rate, but the numbers were super low. And a 50% clearance rate in Brisbane is really good. We anywhere between 40 and 50, again, talking about the last 10 or 15 years. That's pretty typical. We've seen clearance rates over the last 2 years creep into the 60s and 70s, which is truly abnormal. That's that sort of runaway autobahn market that maybe you do need to hold a few fears of overpaying if you're spending every penny you have, right? Now I would think that it's a pretty pragmatic market. It's very realistic. The houses that have signs out the front all have pretty motivated sellers. I don't think there's a lot of real estate agents who are taking on properties that are unrealistically overpriced. It's why there's not a lot of prices on properties, I think. But if you've got the sign at the front, you've invested money in the marketing, you're doing it the right way, there's a reason you're moving. And I think buyers are recognizing that, and they are making fair, competitive, justifiable offers. And they're either buying an auction with maybe one or two other bidders who are really at the pointy end, or they are getting their offers accepted, not necessarily before the first open home, but certainly within the first couple of weeks of a property being listed for sale.
You said that the Saturday wrap that we posted over the weekend had volume was low. Is that correct?
Correct.
I mean, the reason why I anecdotally said that it looked like things were cooling is probably off the back of some conversations with some agents who had said that they maybe buyer interest or offers were slowing a little bit. I don't know whether that's due to July typically being a slower real estate month.
Yeah, everyone's in Queenstown, snow warning, all sick.
Yeah, or feet up, cocktail in hand in Europe. I listened to Josh Fegan and Alexander Phillips, and that's a very successful agent who breaks down the year where July is not for selling. They sell a handful of properties with the intention of selling 30 to 40 a month, moving forward from there through to then December and pulling it up again. If you're a buyer, recognizing that those are still good opportunities
for sure
to buy at that time, whether it be taking away a property before an agent does, piss off on a holiday, or all the other competition is doing the same thing. We had a huge July. We had a huge December last year.
I think they're the only stories that we have to tell of buying cheaper, the deals that we did on the 20th, 21st and 22nd of December.
Because the competition was on holidays. Yeah. They were at the beach. A lot of agents were probably eyeing off that beach trip. So there is opportunities out there. Yes, volume could be lower. There might be less to choose from. But if there are suitable properties that you find out there in those quieter months, take the opportunities that are presented to you.
Definitely.
4 examples of stuff that we saw transact within the last week,
Mm.
which probably speak to those July numbers, where we see big growth over the space of the last 12 months and then still steadying growth. But let's use these as a couple of examples. So first one, we went to an auction on Saturday over at Norman Park. Sam was enamored with this property.
Yeah, we'll talk about, I think, the result in a moment, but I reckon I may have been the only person in Brisbane that would have paid more money for this house because it was like what me and my family want to build, right? And I was like, yeah, I'd live here in a heartbeat.
So newly renovated 4 and 2 with the granny flat out the back with its own driveway, its own car parking space, corner block, one of the better streets of Norman Park. I thought it was fair money, just straight up and down, not a dollar less, not a dollar more than what market value looked like. For what, Sam, stars in his eyes over here.
Yeah, we're standing there at the auction and we play games of guessing prices, and it just helps us. This is why we like going to auctions that we have no intention of buying. It helps us understand whether that feel that we have for the market is right or whether we need to adjust our own feeling, let alone just relying on past sales and data on a screen and conversation with agents. Yeah, and you said to me, where this is, and I was like, it's probably 1.7 in my view. And I'm walking around being like, I want to do that at my house. I'll do that. I really like this. That's not too big, not too small. And you thought a little bit less, so it sold for a little bit less.
Yeah. Well, I'm being a little bit more pragmatic, and I'm nitpicking some of the plumbing issues with the place, but no, not issues, just things that aren't exactly my cup of tea. So again, fair money for a fair product in a great area.
Yeah, 4-bed, 2-bath, 2-car with the granny flat on a 405. I thought it was 1.7. You thought it was 165. Sold for 165 on the nose at auction.
Good buying, good selling.
For sure. That's just really good real estate.
The other one, and both these next two are interesting ones. And this might, harbour back to our previous episode about off-market properties. How you're still not stealing stuff. Both these properties. So the first one is one in Mount Gravatt East, which we saw off-market maybe 2 months ago. Great property. It wasn't entirely suitable for the clients that we had at the time looking in that area. They had offers on that property during that off-market or would eventually be a pre-market campaign in excess of 1.4, subject to sale. There were some conditions on there that weren't exactly in favour of the seller. They eventually took it to market and it sold for $100,000 less. Which again, doesn't that show you that, perhaps that they were trying to jump off the back of the runaway train? Those sellers who were like, hey, the market is red hot. Let's try and get this thing, out to your database, off market, and sell it for what I want it to get. Maybe not what the market was reflective for its value.
Yeah. I think that is a very good example. Like, we were getting phone calls at 6:00 at night on a Saturday being like, if you want this, you've got to be unconditional and above 1.4. And we were like, the good news for us is we don't have to worry about price because we didn't want the house.
Correct.
But for it to sell $100,000, like, we didn't not see value at that level, given again, everything we're talking about now is like family homes other than a townhouse at the end. But that's been the market that's been accelerating. That's been the market where people are buying and selling for a real need. Like, you go house your kids, you'll go and buy the house that suits you, even if it costs you and you can afford it. $50,000 more than you really want to pay, because in the long term, you'll make that up very quickly, particularly in a market that's going up by 1% every month. For it to get a result that feels cheap, whether it is or isn't, but we went through that house with a pretty fine-tooth comb to make sure that if our guys wanted it, we were ready. And I didn't think it was high. Like, I didn't think it was unfair money at 1.4. I thought north of that, it'll take some convincing. But for it to go $100,000 less, a big surprise.
100%. The next one is a similar scenario where property that we saw off market, it was tenanted at the time, this time in Morningside, which was a little left field of where we were looking at the time for these buyers. So it wasn't suitable, more so based on location than anything else. Another, really nice property. And pre-market, we were talking, late 1.3s was going to buy it with a tenant in place. So with that in mind, often you don't get the money that you're after. This is now I'm looking through the lens of the seller. Don't get the result that you're looking for with the tenant in place. You're like, okay, well, let's get the tenants out and let's take it to market, stage it, style it, put it on an auction campaign, and we'll get the money that it deserves. Sold at auction on the weekend for 1.353.
Yeah.
So again, it shows you that it does, putting it on market doesn't necessarily mean that you're going to get better offers than what you got pre-market.
We said to an agent that we saw on the weekend, we were talking about pricing, and I was like, I'm never right. And like maybe a bad skill to have as a buyer's agent. But again, that one there, like we knew people who were bidding on that. And I was like, it's probably 1.4. I wouldn't be surprised if it went a little bit more than that. You'd go on, they just wanted the no fuss sale while the tenants were in place, and they would have taken anything over 1.3. And turns out that was the reality. I think, again, for a genuine 4-bed, 2-bath with sort of not legal height, but good size multi-purpose room underneath, that's a really good buying. Particularly in that nice pocket of Morningside near Blue Poppy. Got nice parks. There's no buses or anything that are running past your house. I think that's bloody good buying.
Can you tag cafes on a podcast at Blue Poppy?
Absolute bacon cafe. Good bacon and egg roll on a Saturday morning.
Fourth example from the weekend was a place at Balmoral.
Yeah, townhouse, 3-2. Sold pre-auction.
That was the one. It's sold the day prior to the auction, right? Yeah. Last minute, like banger. And like the only time that stuff gets taken away pre-auction is if it's getting an offer that's a worldie, right?
Yeah. I mean, our view on why properties will sell pre-auction, particularly in the last week, it's not unusual for a seller just to take the money and run after the first weekend. We had a mate who has a bought place in Manly a couple of weeks ago. They bought it before the first Saturday and it was going to auction. They just asked the question, what do they want? And got an answer, I think, and paid the money. This one, I think, is a case of one of the two reasons why it sells at pre-auction, and that is that there is no interest. And so if they get an offer that week, they think to themselves, let's just almost protect the process for the next one and take it. Or in what is usually happening in a rising market, they get an offer that is so far above the feedback and so far above anybody else who potentially is interested that they know they won't make that gap up in public. And so they take the big money early. We had a property in Mount Cravat that we all agreed was worth like 135, I think. This was back in March, was always going to auction. We get the call on a Tuesday. Yeah, we're selling it today, mate. Great. So we put an offer in at 1.401, 1,400,000 and 1,000. It sold for 145.
Yeah.
And we would never have gone there. I think even if the money was there for our clients, we would never have gone there. We just didn't see value. Even with where we offered, we thought that was the loose money that was going to buy it. And lo and behold, they knew that if it went to auction, we would have crept to probably 1,410, maybe 1,415, 1,420. So they actually got them. This is good real estate in a point of manipulating the market. You got a great result for the seller by altering the process at the last minute, putting everybody necessarily under pressure. So if you are waiting for an auction to come and you think you're bidding and you get that phone call through the week or the text message through the week, that is, we're selling it today. It's usually because there's no interest, or there's an interest so far above market that they know they're not going to protect that gap. So just, if you like it, put your best foot forward, but don't be surprised if somebody's willing to pay more because, more often than not, it's a bit of a silly offer that causes them to pull it early.
100%. Got them sweating, made them probably pay beyond the premium for that property. I drive past that place most days and they've got a lemonade stand out there every day. They're trying to make back that money. So, again, a reflection of the market being quite fair at the moment.
Yeah.
It feels like the right properties are selling for the right price, and then those that aren't, those that are still selling for the runaway price is probably, silly money, pre-auction, day before, freaking out, whatever it may be.
Yeah. So, there's less outliers of the 300, 400 grand above reserve now than there were. And that's a really good thing. And I think that's indicative of a marketplace that's had consistent growth for a long time. And people are now, they're concerned that their budget will not buy them what they want. So they'll attack it and stretch for the 9 out of 10. But they'll happily miss a 7 out of 10 because there may be another one. It's also maybe indicative of it being early August and it coming into that traditional spring selling time, and people are potentially sitting on their hands going, I'll wait to see what happens.
The good ones are coming.
I've only been looking for a month or two. It's not the end of the world. We're comfortable where we are. We want to move. We're willing to pay the money when the time's right, but we'll see what else comes of it. Which, again, markets don't necessarily repeat themselves, but they rhyme. that's why there's a rush in October and November, because people don't buy in July and August or September, but they still want to buy it before Christmas.
Yeah.
So people are in the mentality now on the 12th of August, as we're recording this, is, I just want to be in for Christmas. And there's probably that window for another 3 or 4 weeks to get that fair price before it does go all Hunger Gamesy again.
Yeah, don't make the assumption that the one is coming. Be proactive, make the calls, ask about what's coming up. That's the realistic way to approach those spring selling months. Is that if they have appraised it in June but have planned to launch in September, well, ask if you can go and see it. See if you can attend the photo shoot. Get a head start. Get the research done ahead of time, so that when the inevitable rush of buyers enters the market, being like, "Hey guys, we're having Christmas dinner here. You know everything about it," and you're going to take it away from them before they get a chance to, book the seats at the table.
There's a Bayside real estate agent called David Pierce, and every Sunday he jumps in his car and does a video called "Trust Me, I'm a Real Estate Agent." And I like David. I think he's a good real estate agent, and I think his content is useful to people both buying and selling.
Definitely.
And his video on Sunday was, he's got 2 new listings launching in the next week, but he's got everybody else's waiting till September. Now, because it's David Pierce saying that, I believe him. I think every real estate agent who doesn't have enough listings for the next couple of weeks is going to be saying the same thing, in hope more than anything else. But it is a case of people ride out the westerly winds in Brisbane. They sort of ride out this cold winter that we're all in the midst of, and then they race to sell and buy and move in before Christmas. It makes for a pretty stressful last quarter of the year. But if you ask real estate agents, their best quarter of the year is always October, November, December, because people are making these decisions and they're making them quickly. So, yeah, hopefully that hasn't ruined my microphone or the podcast. I agree with you. Don't make the assumption that there is going to be a better one. If it's 7 out of 10, go through your checklists. Make sure that it isn't the one for you, let alone is. But also expect to face more competition in the face of potentially more options come September, October, November.
Selling sunshine. That's what it is.
Is that our Netflix series?
Yeah. I like trademark. Stop. Lawyers. What's the tip for the weekend for buyers?
All right. Off the back of those stories, we are, if we see anything off market, we ask the question, what's going to buy it today? And because it's not on an auction campaign or it is a price by negotiation, you very often get a response, and it's pretty close to the truth, I would say, at least in our sort of professional circles, 9 times out of 10. If you see something get listed this week and you go to see it on the weekend, ask the question, like make the phone call so that there's nothing in writing if the OFT comes looking in emails, and just be like, hey, what buys this today? I know it's going to auction in 4 weeks, but everybody who's on the market now is definitely selling for a reason. What's their reason and what buys it today? Ask those questions. They're 2 very direct questions. And I would say in more than 50% of cases, you'll get direct answers, and that will help you position an offer to buy it early, or it will help you walk away early. Either way, you're getting a little bit more certainty than somebody else who's just asking, what are they selling? And when's the auction? And when do we need to register? Or not even asking those questions, which is, I think, the vast majority of the market. They go in there begrudgingly giving names and emails and not answering when the agent calls them back. So, yeah. Why are they on the market today? What are their motivations? Everyone's motivated. What is theirs? And what buys it today? I think will put you in a good place to capitalize on a fair market right now. You're identifying yourself as a keen buyer. You're willing to ask the uncomfortable questions, and it's worthwhile doing so, because invariably, and let's say in 50% of the time, you might get the answer. And all of a sudden you're ahead of everyone that was either too scared or not willing to push that and ask those questions to eventually get the result ahead of everyone else. So be the best buyer in the market, guys. Keep listening. He's Sam. I'm Chase. Cue the song.